Hello and welcome to Raj Sabha TV. You're watching The Big Picture with your host Rajat Kane. In next half hour, we'll discuss the crisis in the Essel Group that has led to ripples in the market with short-term debt investors facing heat as some of the country's leading mutual fund houses like Kotak Mutual Fund dealing full redemption in 6 of its fixed maturity plans or the FMPs. The HDFC Mutual Fund too has announced plans to roll over one of its fixed maturity plans that is coming up for redemption. This is due to delay in recovering money lent by schemes to 2 Essel Group companies, Edisons Utility Works Private Limited and Konti Infrastructure and Multiventures Private Limited. In a statement, the Essel Group has said that it has reached an arrangement with the lenders with a resolution time frame of September 2019. The lenders have unanimously extended support to the group, and the same has positively resulted in saving loss of public money. The mutual fund industry has a debt exposure of Rs 7,500 crore to Z or Essel Group. Of this, around Rs 15,000 crore is in fixed maturity plans, with the rest in the open-ended debt mutual fund schemes. Kotak and HDFC Mutual Fund hold most of the debt in fixed maturity plans. Last October's non-banking financial sector crisis sparked by the collapse of infrastructure lending and financial service led to serious liquidity crisis, and the Essel Group's private unlisted infrastructure companies were among those impacting the shares of Z Entertainment, which saw a collapse. To discuss more on this issue, we are joined with a guest in the studio, Kshitij Mahajan, mutual fund advisor, and Pooja Mehra, economic journalist, and soon we'll be joined with Mr. Madhukar, former member, SEBI. Thanks for joining us. So Kshitij, first I'd like to hear from you what exactly has caused ripples in the market and what transpired that there is a loss of confidence among the short-term debt investors.
So Rajat, first of all, thank you for calling me in, and just for the benefit of all viewers and you all, what has happened in this scenario, in this case, that normally in fixed maturity plan, there is a fixed maturity which is given to plan, like this is a 3-year plan in most of the cases, because there's a long-term capital gain benefit in fixed mutual funds. Second, they not only Kotak, HDFC, but there are other AMCs also who have bought a paper of Essel Group and DHFL also. As rightly said by you, that initially this all been triggered in October by ILFS. That's how it started. But what has happened in this case, especially when you're talking about the Kotak fixed maturity plan, there are no redemptions by existing investors. Automatically, after the completion or tenure of the FMP, the money gets redeemed. Now, in the month of January, when this all started, when on one day, fine day, 200 crore has been sold by one of the investor of Essel Group, the share tanked by 33%. So all these investors, mutual fund investors, as well, and along with, there are many NBFCs who are contributing. Rightly said by you, 7,500 crore exposure is by mutual fund investors, mutual fund companies of investors, and close to about 4,000 crore exposure is by your NBFCs, and 2,000 crore is been lent by foreign investors also. In total, 14,000-15,000 crore is the total lending which has been given to these people. On 26th of Jan, they have met promoters of Essel Group, where they have come to an agreement that they will give time, because shares have been pledged by most of these people who have given them money, given time till September to reach a conclusion. Most likely they'll be selling their own stake. So I'm not batting here from Z side, but all I'm saying is that this is the agreement what has happened between them.
Right.
Now maturity of a fixed maturity plan is the particular day when it gets mature. So now the maturity has started coming. Now what has happened in these maturity cases, somebody, like say, who was put in 100 rupees, in most of the cases and recent maturity, he'll be getting little more than 100 rupees. Like maybe, I don't know, 3 years back, what is the commitment, maybe 7% compounding or 6% compounding, whatever it is there. Principal, if you actually ask me, 100 rupees, in most of the cases, except for one FMP which got mature yesterday, wherein they get against 100.6% less in one of the Kotak case. Otherwise, they have been given maturity along with whatever, fees or whatever money which they have received from other assets, they have been given. The point is, on the assets of Essel Group, in most of the FMPs, they are just holding it back, or may have, these AMCs have done a side pocketing. And what is side pocketing, which has been allowed by SEBI, that they can keep that part of the portfolio as a side pocket, and as and when they are expecting money to be received from these folios, they can give it back to client later on. So this is obviously these companies, Z company has delayed the payment, but they have not defaulted. So there is a difference between deferment and default. This is a deferment of payment. Having said that, they have agreed on a agreement which is like till September. They've given time that they can get their payment back, all the investors by Z, because they are also looking at selling the stake. Now, point is that in haphazard manner, if they are going to go in the market and sell the stake, maybe the type of money which they were required to get from that stake selling was not good enough to compensate for what investors have gone through. So they are also taking their time, and the time is there on their side. So none of the investor has redeemed money. It is an automatic redemption what happened in FMP, and that is what has happened. Just to add to this entire scenario, one need to understand one thing very importantly, that this time what is more important is to handhold clients who have put in money, because most of the people say FMPs are safe. Any of the mutual fund product in which you invest is as good as an equity mutual fund, not in terms of the same type of risk is there, but there is a risk parameter on which these funds revolve. Most of the client must not be knowing that even RBI guarantees 1 lakh per account in a bank account. Obviously, the system of our banking is so strong that normally they don't allow any bank to fail. But most importantly, one should understand that these funds invest into companies to raise, who raise money to run their businesses, and at the same time they get a better return than vis-a-vis other companies. They have been different ratings. Right. So these all companies in which they have invested of Essel Group were all AAA rated companies. And I must say that maybe at that time things were looking right 3 years back, and it's a locking product. So there's no churning in the portfolio because you lock a yield. So I'll give an example. Let's say you have bought 3 papers. Normally there are 18, 20 papers and maybe 12, 14 papers in a FMP. Let's say you lock a yield at 8% overall. So you don't churn the paper as you want that entire cycle of that yield to play out. After 3 years, you get that type of coupon in your return.
Right.
So normally there's no churn in the FMP part. And when they have bought this papers, businesses were fine, things were looking fine. It all started happening from January onwards.
Sure. Right. Pooja, I mean, how big, or rather you can say how significant this aberration looks like? It's a crisis or it's just a deferment of payment? A repayment, I mean.
What is the issue here? The issue is that there was a close-ended fixed maturity plan,
right,
which opened for investments in November 2015. It was to mature in April-May 2019.
April 15th,
So about 10 to 20% of most of these plans, the exposure was to securities, non-convertible debentures of the Essel Group. The Essel Group is in problem because, and these non-convertible debentures were supported by equities of the Z Group, shares of the Z Group.
Okay.
So when a mutual fund buys non-convertible debentures of a company, they are lending money to that company, but the security for that loan, that lending, is the shares of the parent company. The shares of the parent company were Z Group's company, and the rate of cover was that for every 100 rupees the Kotak Mahindra Mutual Fund has given to the Essel Group companies, they were given shares of worth 150 rupees of the Z Group.
Right.
In January, because of issues in these companies, the share price crashed, and the value of that supporting, you can call it collateral in some way, that supporting shares of Z Group fell below 150% cover that was provided under the rules. That is where the fund managers of these Kotak Mahindra FMPs had the option to sell those Z Group shares and recover the money, or they also had the option, as per the agreement, to ask Z Group to give them more shares to support these loans to Essel Groups. That is allowed under the rules. But what did the Kotak Mahindra Mutual Fund managers do? They went and held long discussions with the promoters of these companies and arrived at a conclusion that we will neither ask you for more cover of Z shares, nor will we sell your shares because that will plunge the share price even more. Instead, we will give you 6 months more. Now that raises all kinds of questions on whether this was a good decision making by these Kotak Mahindra Mutual Fund managers on behalf of investors or not. It certainly helped the promoters, there's no doubt about it, because the share price did not fall. But was it the right decision for individual investors in these FMPs or not, because there is no guarantee what the price will be 6 months later. It may be less than what it was in January.
Yes.
Also,
yes.
we don't know if the FMP will pay interest for keeping money for another 6 months or not. And these are all kinds of questions that I think the regulator will have to get into. And depending on how the regulator, and how the market decides how these kind of situations are going to be handled in future, I think on the basis of that, investor confidence in FMPs as products will now depend, because this has become a benchmark case. So I wouldn't say it is a crisis, because there are not, the percentage of investors out of all investors in mutual funds and FMPs who have this exposure and who've been told to wait for 6 months is probably quite small. But as a product category on the whole, a lot of investors will at least have these questions on their minds, which I think needs to be addressed.
That's true. That's true. If it's not a big crisis, then certainly there is a deficit in terms of trust, in terms of the security. Where does SEBI comes into picture amid all this?
I would first of all say that the present situation is not a crisis or not very alarming, in the sense that this is a product to those people who wants to earn slightly more than what they get from the other sources like banks.
Okay.
So these people are investing only for some benefit. And FMP is among the various products in the market. FMP is a very well secured product in the sense that it is a debt fund, it is supported by the debt documents and in addition to other guarantees or the security of the shares. Now, so far as the regulation is concerned, as I remember, regulation says, number one, that all mutual funds are required to list their mutual fund in the exchange, exchange. So there is an option for the investor to trade, but unfortunately in India nobody is taking that route. They want to remain glued to the fund till last, so with the view that they will be able to recover the original investment along with the whatever additional value the fund is giving. Secondly, the regulator says that the mutual fund should be allowed and are allowed only to invest in the investable grade loans or securities. That means very well rated companies are allowed to be invested by the mutual fund.
Okay.
So in that, now why this crisis or this development comes in? The first point is this, that in the market ups and downs do come, and we should not feel that everything will remain on moving only one side, means we will always be going up and up. Now with the growing economy, the people want to invest in the various projects. The projects may be delayed, may be not so successful, and then there will be hiccup. But seeing that the FMP says that if you are, that means that mutual fund is not in a position to pay on that date, then they can at least extend the period of payment at least by 1 year. So that gives enough time for the mutual fund to manage, to negotiate with the borrower like Z, and then Z will be also able to unfold their investment or sell out their securities, so that in time they can pay the mutual fund. So in all, these things are not, I would say, they cannot be solved on the day one. It all takes time. And big investment cannot be sold out immediately. You need the people for purchasing it. So the people who have invested in FMPs should understand all these consequences. That if they have invested in this, they have invested with open mind, and they should be ready to understand the risk of the market. This is my say.
Right, right. Kshitij, so usually does investment FMPs comes with a caveat that it's only you, your decision of investing would be responsible for it, and there is, as Mr. Seth said, that regulation doesn't seem to be, I mean, I'm not saying that there is no regulation, but that area seems to be a little hazy.
So, rightly said by Mr. Seth, most of the people who invest in FMP, they invest for that extra kicker in return vis-a-vis FD. Now, one most important thing which one need to understand, investor understands that in FMP, there are a set of various bonds in which they invest. At the same time, it's more tax efficient also. Wherein in fixed deposit, you've been taxed at full rate, whether 1 year, 2 year, 3 year. FMP qualify as a fixed income product, wherein the tax is you're 20% with capital gain after 3 years. So most of the FMPs, rightly said by her also, that we do normally FMPs more than in excess of 3 years, so that he gets a tax benefit also. But try and understand when we say that the factor of the element of whether this can be risky or not. Most of the clients, they do understand, but it's not only Kotak. I just want to add to what you were saying, that there were 44 investors who have met the promoters of Essel on 26th of January. Right. So there are a lot of other AMCs also. And when you ask about the FMP, so let's say FMP which is maturing yesterday, the exposure was in excess of 100 crore. Today it was again 100 crore. Yep. Point is that try and understand FMP, every day there are 5-6 FMPs going on. But the overall exposure in mutual fund is 7,500 crore. So let's take for example, on single one day when there was a selling of 200 crore, which I said earlier also, that share tanks by 33%. So there is a lending of 7,500 crore from a mutual fund houses. So the solution which they have sorted is to give time, where there was a provisioning of giving time to Essel Group promoters, so that they can sell their part of stake and make the repayments to the investor which are there. So my point is that that's the best solution. Unless and until you have not gone for that solution, they would have sold these shares which were pledged, and market would have not even allowed them to take you can say the principal back. So point is that this funds have been side pocketed. At the same time, it's been deferred, I'm saying, and rightly said that it's not sure that whether you're going to get the money in September also. Having said that, there's an intervention by government also. There are a lot of things going on, and as we all know that we all have to take care of our CIBIL score. Now they all have to take care of by IBC. So what CIBIL has done to most of our investors, IBC is doing to most of the corporate India. So now resolution is coming fast. We are just hoping for all those investors wherein they have invested in consultation with most of the advisors. They are family offices, they are corporates, they are individuals, but the population or percentage is very small when it comes to a FMP as an investment.
Pooja, I would like to hear from you, as to what is the ambit of regulation here? By that I mean the role of SEBI, and also does this development, as currently nobody is agreeing that it's a crisis, this development reflects a larger policy picture?
I'll come to that later, but I want to first say that a point has been made that FMPs investors are getting into for returns. That is true. Anybody gets into any investment product for returns. It is also said that investors need to be sensitive to the fact that there cannot always be upward movements in markets, and there are likely to be downward movements also. But I think in the case of the Kotak Mahindra AMC, which has announced that they are deferring redemption or part of the redemption related to the Essel Group investment securities for 6 months, in that case, I think the investors did their job by looking at the fact that the exposure to Essel Group debentures, non-convertible debentures, was covered by the Z Group shares. Okay. You see, so it is not that the investors have taken undue risk. They are going on the assurance of the AMC that the debentures are covered by securities. So what comes into question over here is the role played by this particular group's fund managers, because they have taken a call not to increase their security cover of Z Group shares or to sell them at that point in time, because they are hopeful and nobody knows whether they are right or wrong. But all that I'm saying is these are how we frame the issues in this particular case, that 6 months later it will be a better position than what it is today. Now, what I'm asking is that what should have been the guiding principles of the fund managers? Should it have been that an investor has looked at the security cover and therefore taken a decision to take this risk by putting money in my AMC? Or should it have been that the promoters will lose more money if the share price crashes today? So the duty of the fund manager is to his investors. That question will come up 6 months later in September, when it is decided how much of the remaining balance redemptions will be made to investors, which is sought to be deferred today. That is the question I think that needs it is obviously legal, it is obviously not illegal,
right.
But that is a question that I'm saying that as a matter of policy needs to be looked at by the regulators. It may not be illegal, but it will certainly, in future, investors will factor this in as one of the risk factors of putting money in FMPs.
Right. Yeah.
So, obviously what Pooja is saying is right, but I just want to add again that FMP exposure out of the 7,500 crore, what FMPs are maturing is not even 300, 400 crores. Why this agreement has reached between investors, not only Kotak Mutual Fund, there are other 5-6 AMCs, the other investors also,
yes,
and between Essel promoters, because tomorrow anybody will start selling the stake in their group, as rightly said by her, which was pledged vis-a-vis the loan given. The share price will not be even at a range where you can recover half of it, what it is now. So time has been given, and then everything, in every act what they are doing, SEBI has been kept in loop, that time has been bought. And you're rightly saying, Pooja, that you don't know that what is going to happen in September. But the best way to do it, to give some space to the group so that they can act and do the stake selling. And that's how they have done this. So when you're saying they're not playing on client side, why they are playing on client side by doing this? Because there's a lot of other money also which is lying. And when they have invested into these companies, so just to share with both of you how it works, you can't disclose a portfolio to a client when you invest in FMP. Because when the money gets collected, only then you carve out a portfolio. But you can tell about that, what category of FMP this is, whether it's a AAA FMP, AA FMP, AA FMP. That combination you can share. So you don't know till the time you invest and this, the portfolio comes out that this FMP has this portfolio. It's not allowed. And we, even as a distributor, we also don't know,
Right,
but we know the category of FMP, whether it's a AAA or not.
The point I'm making is not that. The point I'm making is that the fund manager has the option of converting a certain pledge. He chooses not to make that option.
Right.
Now, who's going to bet on that? When they put their money in an investment instrument, I'm not going to, no investor is going to bet on the fact that an existing option will not be used.
That's true.
That is the point I'm making.
Right. Mr. Seth, lastly, I know that SEBI may not have commented upon the agreement between the promoters and with the fund houses. Now, what best it can do so as to monitor such a development in future, as, we don't know what may happen in September? Or can SEBI monitor such sort of investment to the hilt?
See, I may tell you that as I understand, this sort of a development took place only once. And that too when at that time when the Indian economy was opening up to the market, global market. So first of all, we did not have that much of experience, and now it is for SEBI's people that they are going to certainly review the entire thing, and they will come out with the necessary further guidance or regulation to take care of such an event. But I come back to the one point, that who should be more responsible? The regulator, yes, but then the persons who are putting the money in the particular investment, that is in the case of Mutual Fund and Kotak Mahindra and FMP, when they put the money, they are open to all information of various mutual funds. And when they find that this fund is giving more better results, good performance, then they go to that investment. Now coming to the role of the managers who are managing the funds, one of the aim is that they should provide as best value to the investor so that people should come again and again to their fund. Now, so third point is that nobody knows what is the future. If everybody would know that this is the future, then I think that is the best period. So the entire thing comes when the event strikes to you. Now, I only would say again and again that people should have faith in the SEBI and its regulating mechanism. Number two, should also have faith into the system, because when the securities are going to be sold out by Z Group, certainly there will be enough opportunities for Kotak funds to get the money and pay back the investor at the right time. And then I would also say that having learned from this experience, people should start trading in the market also. When these funds have been mandatorily listed on the exchange, and their NAV is already, they know that this is the NAV, every day the NAV is being published. So why not they take opportunity to move out or move into the separate or different mutual funds?
Right.
That would be more better than waiting up to the last day and then they say, we are going to be affected.
Right. Thank you, Mr. Madhukar. Thank you, Kshitij, and thank you, Pooja, for joining us. So clearly, this is an important development in the market, and soon it's over, the better it's for the investors. Thanks for watching Big Picture.